Listen, we got John Legere here, so we're not even going to be able to wait. This is for TheStreet. This is live, Facebook.
I'm here.
Okay, the quarter, if you want to put it in context, say, of Dumb and Dumber and Petey, how's it look?
Record quarter, and by the way, we're the only wireless carrier with growing service revenues, and we're celebrating today that the 5-year anniversary of the Un-carrier, we've gone from 33 million to 73 million customers.
During your tenure?
During my tenure.
Where are all these customers coming from?
They're coming, so we've tracked postpaid porting ratios, right?
Yes.
On a daily basis right now, we're porting 1.9 to 1 with Verizon. So we get 2 for 1, 1.84 to 1 with AT&T, and 1.4 to 1 with Sprint. So they're coming from everybody, which is wonderful.
Now, I want to talk about TV because we weren't able to talk about that when we were talking in school. Now, I am hearing over and over again that you guys are the most involved with a Netflix. You're most involved with everybody who is, frankly, anybody these days in TV. But we don't get the context because DirecTV is TV, and that's AT&T.
DirecTV is an old, archaic, monolithic thing that they bought that's dying, and you know, great idea. Hey, you want TV? We're going to put this big dish on the side of your house. Reality is that millennials and Gen Zs, this is the device that they use. We just bought a company called Layer 3 TV for technology. You were talking about something yesterday I'm going to be talking about, which is personalized service.
Personalized, whether it be Nike, whether it be Disney, whether it be Twitter.
So keep in mind of this. We have 73 million customers that have this. The phone has never met the TV. But the phone knows what you want to watch in social media, what you want to watch on your TV, all of your apps, all your IDs, and what we're going to do is bring together the best of social and TV through the device. We're going to introduce the smartphone to the TV.
Will you lever big data?
Of course.
Tell me
how. Of course. But we have 73 million customers. We know everything about their likes and dislikes. They use their smartphone for everything. So we're going to turn things around. We're going to launch something this year that is going to be a personalized use of your smartphone device to navigate all of what you want to do simply. It's going to be the way people watch TV. And nobody has a problem with a gigantic screen at home. You just want to tell it what to do instead of poking with a big remote control.
Okay, how much of the growth is your pure guerrilla marketing? You're on Twitter. Obviously, you're not buttoned down. When you talk, you are very much more in what a millennial thinks about what a CEO would be. And I'm going to add this. Why don't other CEOs do what you do? Why are all other CEOs, 499 CEOs, who would be mortified and feel like that the lawyers say this is not what to do?
So my theory in 5 years here, my philosophy is listen to your employees, listen to your customers, shut the up and do what they tell you. CEOs in general sit at desks, they're protected, they're yes men surrounded, they're overpaid, they're pampered, they go to country clubs, they don't go near employees because they tell them what they need to hear. That's BS. Why CEOs don't do what I do? I have 5.3 million followers on Twitter. I have a cooking show on Sunday.
He's a must follow. Can I just tell you he's a must follow?
My cooking show has 3 million viewers a week, right? I had Kate Hudson on with me last week.
She's
fabulous. So Slow Cooker Sunday.
I saw that.
This weekend is my 100th Slow Cooker Sunday. You know what it is? It's customers and it's potential customers, and you learn so much every single day from them. They tell you what to do. You launch, it's called an Un-carrier move, and then they come. And we only have 19% market share, and that includes so many people.
Average age, you think?
Yeah, millennials. Yeah, we're skewed younger, but by the way, the most successful new segment that we launched this year is called Unlimited 55. 2 lines of unlimited T-Mobile One for $60.
People 55 and over,
yeah,
like me?
Like me, come on. And you know what? You know who those customers are? They're prime core Verizon customers, and we're cutting right into the heart. So
now,
first we got the kids.
Most people will never speak about competition.
Yeah.
You know, if you ask somebody, a food company, about competition, they say, listen, we're really focused on ourselves. Yeah. If you ask a technology company, well, what about competition? They'll say, you really should be focusing on what we do. You actually interject what the other guys do. Is that because, why are other CEOs afraid to talk about the competition?
Because they can't back it up, right? And the issue is that this industry had been run by a duopoly. The wireless industry was one of the most hated industries, second only to the cable industry, which we're going to hit later. And Verizon and AT&T didn't listen to customers. They were the enemy. Consumers needed a hero. They needed Batman, right? And they needed somebody to come in. So we call them out by name, and we back it up.
Do you think Verizon thinks they need another hero?
Verizon's in big trouble. By the way, Alexander Graham Bell McAdam, who was on your show many times at the Super Bowl, is trying to fool people about what 5G is. And the issue is they're directionless. Verizon made their living on having the best network.
Yes.
They don't have it anymore.
Yeah, hey.
They don't have it anymore. Yeah, hey, Jim, listen. We cover 322 million pops, and we've been the fastest 4G LTE for 19 quarters. The game's over. We're going to deploy more and more. The network speed is ours, upload, download. Our people love customers. We're number one JDP. They're dead. They don't know where to go. I can't wait.
Well, I want to thank you, John. As always, you're succinct and you have a viewpoint. I would say that you have I think you have like a viewpoint.
Yeah. And Jim, go Eagles. Happiest event I had was watching you get to see that and win.
I cried because what can I tell you?
And my double thank is you sent that dimple quarterback home with a loss. I love that.
We all do. Other than a couple of zip codes. Thank you, John.
Thank you, Jim.
We're going to continue our broadcast away, but
John, thank you.
Quarter. People should buy the stock. I'm just going to say it, okay? Right? Hey, if it's true, it's true.
Jim,
well, there you go. That's John.
We love John Legere.
He's hard not to love because John is a competitor. Now, a lot of CEOs are competitors, but they want to be above competition. Why do I like John? And I play with an open hand. I like John because he's winning. He has added 5 million customers a year, and that is pretty amazing. His churn is very low. He has fixed the technology. Why did they have so few customers when he started? Because people said, you know what, they don't cover the whole country, and it's spotty. Most of my friends and my kids most of my friends have switched to T-Mobile. My kids are on a family plan with Verizon because I am a little bit atavistic. But and I don't want to switch because it's too hard for me. But John works for me to switch pretty much every day in direct messaging on Twitter. And it's funny.
He's the un-CEO.
Yeah, he is the un-CEO. Are you the un-CEO, John? Can I call you that?
I am.
Right?
I'm the un-CEO.
Like if I bought you a tie, would you wear it?
No.
Thank you.
Look at those shoes.
On my own socks. I got a Christmas outfit from you that I wore.
You didn't wear. You made fun of me. You said it was highly flammable.
Well, it was. It did have a bit of it did have a bit of West Texas crude to it. Put it on. It itched. It itched, so I took it off. Hey, it itched. Whatever.
A memorable moment on our live broadcast.
Yeah, well, it's just different because he's a different kind of CEO. He's a competitor. He's a competitor.
A lot to learn from him. All right, yes. Jim, meanwhile, what did you make of Twitter's earnings? This is now an asset class.
Anthony Noto on his go out delivered the quarter that seemed impossible 2 years ago. They actually gap positive. They are, if you back out Thursday Night Football, which I call Tired Night Football because it's so hard to watch, and Telpart, which is a company they sold, you actually saw 7% growth. The daily average users had amazing growth, which is, of course, a very important metric. And Twitter's become a preferred way for companies to advertise. It was not that long ago. So you're seeing Twitter, Snap. People are selling Facebook believing that these two are taking share. That's not true. What's happening is the pie continues to grow, and Facebook remains the premier way to be able to get in touch with millennials worldwide. And that's the group. Now, people have to understand how advertising works. Let's say you're 17, okay? And you're trying to figure out whether to have Crest or Colgate, Diet Pepsi or Coke. Once that view is formed, typically between 12 and 17, the odds favor that you'll stay with that for the rest of your life. Now, sometimes they're disruptive technology. Dollar Shave Club versus Gillette, okay? But for the most part, if you can reach people 17, 18, 19, 20, then they may stay for life. Now, millennials have very short attention span, but Snap, the average commercial is watched for 10 seconds, which is far more than anybody. That's a fabulous rate. So if you're on Snap, as an advertiser, it's entirely possible during, say, their Olympic coverage that they may get people to use Crest if Crest is going to advertise, and that person might not shift. So that's what's going on. It's the way to reach people when they're still forming what they might choose for the rest of their lives, which is why Snap's undervalued, Twitter's undervalued, and Facebook, owned by Action Alerts, remains undervalued.
I'm glad you mentioned millennials because millennials also love their delivery. What did you think of Grubhub?
Grubhub is a heavily shorted stock. People say that people aren't short stocks. That's just wrong. They're just not vocal about it. Grubhub had a 20% short position. I have had Grubhub on Mad Money repeatedly. Why? Because their service is the best. It's seamless in New York. Bar San Miguel had to add them to the list simply because if you want to have customers, especially when it's cold, you have to be affiliated with Seamless, which is Grubhub. Yum realized that and bought $200 million worth of Grubhub stock, further putting pressure on the short. Grubhub is a real company. A lot of people felt that there's no way that there's any barrier to entry to food delivery. It turns out there is, and scale matters. 1,300 cities continue to buy Grubhub. It goes higher.
Jim, quickly, who do you have on Mad Money tonight?
I have Inga Tulin. It's T-H-U-L-I-N, but it's pronounced Tulin, which to me has always been the great portfolio company. Let's talk about 3M for a second. This is a company that is being tossed around by all these programs, especially the market on close, readjustment of the different VIX products, of which there are many, by the way. It's not just the inverse that just got shut down. There are many of these products, and they are the tail that's wagging the dog. They're why you had that decline of 300 points between 343 yesterday and 4 o'clock. That's part of a rebalancing. So 3M is hurt by these. So I would, if you want to own 3M, I would stick a bid in below the market at 3:48 p.m. and then another one at 3:59. Get a good average. So if you want to buy 300 shares of 3M, 150 and then another 150, and I think you'll get the best prices. Use only limit orders, do not use market orders.
All right, Jim, there are many more stocks we're going to talk about, but everyone needs to join us on actionalertsplus.com.